welcome to the channel. This is Reliable Rudy. In this video we'll be going over our part 4 on Walt Disney Company, where we're mainly focused on the charting aspect of things. I did tweak my numbers slightly, and Everything Money Software did update their most recent earnings report in. So all I did, I lowered the revenue a little bit and the profit margins, added a little bit more margin of safety, and I added this 99.15 to my watch list. If the price ever drops below 99.15, I'm definitely going to be interested in Walt Disney, and we'll touch base on that on the chart. But before we go over to the chart, I'm not a licensed financial advisor. Everything in this video contains only my opinion and is for entertainment purposes only. I have no individual holding in Walt Disney. I have nothing to gain, I have nothing to lose. I'm simply just stating my opinion. So before we go to the chart, we are going to look at the holders. Now, I've already looked at it, but Vanguard Total Stock Market Index Fund is the top mutual fund holder for Walt Disney. So even though I missed out on Disney when it was down trading underneath 100, I'm still going to benefit from having it in my VT, Vanguard Total World Stock Market Index Fund. That's the beauty of VT and why I continue to dollar cost average into broadly diversified index funds. Because I'm not perfect, I'm going to make mistakes. This is why this is a larger position for me, for my portfolio. So, nonetheless, let's go over to the chart. I know this is what you guys are tuning in for. This is exactly how I had my chart set up as we were getting a fall in price for Disney. Now you can see we have a nice long-term trend line. We got our 3 points of contact. There is a nice double bottom that comes in right here, and we tap this on point, back testing the top of my downtrend. We'll go over all these lines that I have in here through the course of this video. It is going to be a longer video. If that's not something you're interested in, you want this shorter 8 to 10 minute videos, well, you don't have to watch the whole thing, but there is a lot of good information that we're going to go over. So the green lines represent my gap downs that never got filled on the way down in this price, and these red lines in here, I will zoom in just a little bit, are my gap ups on the way up. Now when I started tracking this, I was starting to get more attracted as the price kept falling, and I had identified these as buying windows right here. Now the red lines are the gap ups, while the yellow lines is my support. You can see over here we're going to go to the very beginning where I have this set up, and we're going to switch this over to a day chart. So every candle now represents a day. You see this triple top that we set right here? This triple top, we never set a close above this line, acts as resistance. Now when we push through, I'm looking for it to act as support. It's trying to. It does again, does again, does again, holds as support again. And let's keep going over. Holds as support again. We do trade below that. And ultimately, this is the most recent bottom that we have, and we do fill this gap that we have set right here. And ultimately, I never made a position in Disney. Do I regret it? No, I never regret anything, because everything's a learning curve. Everything is something that you can analyze to help you become a better trader, a better investor. Do I wish that I bought this buying window that I had laid out? Yes, of course I do. It's roughly a 40% trade at the current price, and up to this gap fill, which we're going to go over real quick before we clear everything, it's about a 22% trade. Do I wish I was in on that trade? Yes, of course I do. But as I stated, I already am a holder of Disney in my Vanguard Total World Index Fund. So keep that in mind. So this downtrend right here, we are still quite a ways from it, but we have our shorter term downtrend that we are coming in contact with right here. So we're going to go and dive into this real quick. Now, first I want to talk about this gap down. So on June 2nd of 2022, we gapped down, and this never got filled. Now let's see how we come in contact with this. Now keep in mind, we're 2 days. On this day when we fill this wick, there was definitely sell orders directly off that gap. You can't tell me that there wasn't. We wick right through it and it gets set selling pressure. And more than likely it was people that got in, probably down at this window, and said, I'm going to run this up to this gap and I'm going to sell it before the earnings. Some people don't like holding a stock going into earnings. But look at what transpired. So the day before that, we gap up, we wick through that gap, we get the selling pressure. Now we attempt to come down and fill that gap. The buyers hold it up above that gap. Next day, we gap up. Now they reported earnings after hours. If I click on this, it shows that moon symbol. That means they reported after hours. Look at how we set a close on this day. Look at this previous high right here. We set a close above that previous high. Bullish look going into earnings, and they reported pretty good earnings. Now we gap up the next day. We set a direct wick into that shorter term downtrend that I have set. You see that? Direct wick into that. Now we do get some trading days above this. You can see we're trying to hold above this. This wick is backtesting the top of this downtrend. Now if we crack below this downtrend, I do not know what that holds in store. I do not have a crystal ball. I do not know what the future holds. But I would be careful if we do get a crack on top of this, because it's going to try and come down here and fill these gaps that we have. And we do have quite a few gaps. There's a gap right here, 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 and a gap down here at 91.83. So do I think it's possible that those gaps get filled? It is possible, but like I said, I don't have a crystal ball. Now, one other thing that I want to point out before we clear everything, look at how familiar this looks right here. See these two downtrends? Let's go over here. We're going to go over this in particular later on in the video, but look at how similar that looks. Is it possible that's what's transpiring? I don't know. It'd be pretty crazy if it was. But ultimately, I probably didn't buy this recent low right here because I was being greedy. A lot of the market was down, and I probably wanted to buy the next buying window. It's closer to my overall long-term uptrend, and it would have been a gap-free chart from our COVID drop. I would have definitely been interested in that as well. But nonetheless, we're going to clear our chart. We're going to start from scratch, and we're going to go over this drop, and then a little touch base on our COVID drop as well. So I'm going to clear the chart, and we're going to start over. I'm going to switch this over to a month chart. Now I can see, I want to see the whole entire history of the stock. This IPO became a publicly traded company in 1968. I want to set a trend line. Now I'm looking for 3 points of contact. Now my 3 points of contact right there, boom, boom, boom. We've never come in contact with that since 1984. Do I want to use that? Also, if I keep it like this, it's not the most parallel channel. So I'm going to tweak this just so that we get that extra point of contact right there. And we're going to tweak the bottom of that. Now you see how this is a nice parallel channel right here? Beautiful. I like exactly how that's set up, and that is how we're going to keep our channel moving forward in the video. Now I'm very focused on this drop. We're going to switch back over to a week chart. Now every candle represents a week. We're going to zoom into this fall right here. Now what do I see? I see a 1, 2, 3, 4, 5. Now my wave 4 doesn't really backtest the bottom of wave 1, but I mean this is a clear 5-wave structure, and it's actually the start of my uptrend. Now touching more into this uptrend, I can see this nice double bottom that comes in off of this. I'm going to push that right there. Now why did I put it right there? We do trade below it a little bit, but when we push back on top of it, you see how we backtest the top of it right here real quick before we ultimately start moving forward. I like exactly how that looks, and that's how I want to have my uptrend set. So with this 5-wave structure to the downside, we're going to use a fib tool, top of the move, bottom of the move, and we're going to see how this extension plays out. Let's move this all the ways across right there. Now, at my first extension, sell off. Let's zoom in so you guys can see this a little better. Sell off. Sell off at my second extension. We get a little shoulder as we're approaching our next one. We do trade above this, but you see these wicks that are coming in at my full extension? Supply and demand. There were people that wanted to sell the stock into this full extension. Now with this full extension, we do have a nice sell-off right here over top of my full extension, but nonetheless, we hit this full extension in July of 1989. We pushed that full extension and never come back in January of 1992. 2.5 years of trading sideways at this full extension. Supply and demand. More people want to buy than sell. The stock price is going to go up. After 2.5 years of consolidating sideways, it was finally enough, and we pushed past this full extension in 1992. So I don't want to talk too much about that fall because this is the fall that's really important to me. I'm really focused on this fall. There's a lot of good information to go off of over here. Now first thing that I see we're going to talk about this W pattern right here. Now you can see we are getting selling pressure at the top half of my channel that I had set right here, but we have a nice W pattern right here. If I was going to set this out, now I don't like how this neckline is a very high neckline. You see how when we set this neckline in double bottom right here, this neckline is extremely extended up on the high side, but we are going to mark it out just for the sake of this video. Now we do get our extended right leg. We set a close above my left leg. Here's my left leg. We get a close right here above my left leg. I'm instantly going to be attracted to this neckline. Now what else do I see here? I see we have a gap fill. See this gap fill? See how we try to fill it right there? Now when we do backtest this neckline, we got 4 weeks of trading inside this window. What is this percent run to the upside right here? 18% trade. You did very well. Now you're out, and look at what transpires off of this neckline. Boom. Huge sell-off coming off of that. We also have a 1, 2, 3 triple top, lower high, another lower high. I'm going to want to mark that with a downtrend right there. 3 points of contact, and look at where we transpire with this. So we set this third top. This is the start of the dot-com boom. The year 2000. October of 2000. Now we come in contact with this again in February of 2004. Almost 4 years of trading before we come in contact with this downtrend again, and we do get price action off it. Supply and demand, if more people want to buy or sell. Now there's a lot of good information to go over right here. From this triple top, we get a 1, 2, 3, 4. Now my wave 4 pretty much backtests the bottom of wave 1. Here's my wave 1. My wave 4 backtesting the bottom of it, exactly what I want to see, and we do get a wave 5 that comes in right here. Now I also want to set this downtrend right here. We got 3 points of contact. Now what transpired at the end of our 5-wave structure? We get this higher low and we start this uptrend. We're going to mark this uptrend right here. Beautiful, exactly how I want it set up right there. Now when we push this shorter term downtrend, this is the downtrend I'm talking about right here. We push this downtrend, full green engulfing candle, and we try to trade back down to it, but buyers hold it up. Ultimately, look at what happens the next time we come in contact with this uptrend we have set. We trade down to it. Now, this is after we had already got rejected from our longer term downtrend, the triple top downtrend right here. Now, what happens right after we come in contact with that? 1, 2, 3, 4, 5-wave structure down to my uptrend. Absolutely gorgeous right there. Now what happens when we actually do push on top of this longer term downtrend from my triple top? Right there. We push it with full green engulfing the same way we did over here. And what do? We attempt. Now I can play with this a little bit right there. We set this double bottom on top of my downtrend and we continue the run. Now, this downtrend is not over with. If I pull this downtrend further over here, I'm going to try and keep it exactly the same. Triple top, meet with it, rest on top. We come in contact with it again, meeting up with our overall long-term uptrend. Look at that, guys. You want to talk about a world-class entry right there. This was it. A world-class entry at the end of my housing market crash. Now, you can't tell me that's not a coincidence. You can't tell me, guys. I'll argue that to the day I die. You cannot argue that. Supply and demand. If more people want to buy than sell, housing market crash, my ass. That's what I think about that. Because look at this freaking run that it goes on right here. 700% run. Housing market crash. Yeah, what a bunch of baloney. Well, nonetheless, we're going to take this 5-wave structure and we're going to go top of the move, bottom and move exactly how I did that. Now you see, we do get some sell-off at our all-time high price. You see this double top that comes in right there? That's what I'm focused with. Double top right at my all-time high price, sells off. We get some congestion at my first extension. Congestion at my second extension. Look at this sell-off at my next extension right here. Almost taps it on the money, sells off. Tries again, sells off. We trade sideways for 4.5 years. I know because I've already attempted this video. we get direct sell off at our full extension. Sell off again. We trade off above it. We get back below it. Look at this selling pressure on this wick right here for another lower high. Now, what just so happens to be this fall? COVID drop. You can't tell me that's not a coincidence, guys. This is a full extended stock. Setting a lower high wick into a full extension, COVID comes. Just out of nowhere, right? Nobody could have ever seen that coming, right? What a load of crap. That's what I think about that. We're going to take this off. I know we're at 15 minutes, my bad. I'll start trying to wrap this up, guys, but there's still good information to go over here. So, COVID drop right here. We're going to take top of the move, bottom of the move. Where do we get rejected at? Now, we've already mentioned in all of my Disney videos that they were completely, hands down, negatively affected from COVID. We still get this run. Where do we get rejected at? On my first extension. Now, look at my full extension. Is it a coincidence that this full extension is sort of meeting up with the top of my channel? Let's go back and look at the top of my channel. Right there. Is it a coincidence my full extension is meeting up at the top of my channel? I'll leave that up to you guys to decide. Now we are going to we're going to go over to a day chart. And I'm going to mark this in exactly how I had it before. We're going to take that fib tool off. So, this very top run. Now, why did I set this long-term trend line like this? I got 1, 2. We set a double top. Let's zoom into this a little bit, actually. So, we got our first point of contact, second point of contact. We set one little close above that, but ultimately, this is a double top selling pressure. Gaps down very next day. I like exactly how this downtrend's looking right there. And you can see we attempt to come in contact with it again, supply and demand. It just so happened we were coming into this day on earnings. This is the earnings day right here. Is this a bearish or bullish look going into earnings? That's bearish all day because you're getting rejection off of your trend line, your downtrend, my bad, and you have this gap that needs to be filled. We gap down below that in general with these earnings because they were negatively affected over the last 3 years. You can't tell me that they weren't. So what's transpired from that point? We're going to set our other downtrend right here, exactly like that. Now, why do I have it set like that? Because we set this double top right into it. I got 1, 2, 3. Selling pressure, wick, as we're getting to that fourth point of contact. And look at how we directly come in contact with that. Basically on the earnings day. Coincidence or not. And now we're trying to rest on top of this. If we fall below this trend line again, I don't know what's in store for Disney. Are we going to come down and trade down at these levels? I don't know. But looking back, remember this look right here. We have our long-term downtrend and our shorter-term downtrend that we're testing at the moment. Does anything look familiar there? Guys, does anything look familiar there? Ask yourself that. I mean, if you guys don't enjoy this content right here, maybe I don't need to make videos this long about it, but this was all extremely good information and why I think the potential for investing and understanding charting is very important in my Reliable Rudy process. Drop a like, drop a subscribe. I enjoyed the Walt Disney series, and I look forward to making more videos about this, and especially over the charting stuff, because this stuff is mind-blowing. Yeah, if you guys like the video, I hope you guys liked the video, and we will see you on the next one.